The Financial Survival Network, helping you to survive and thrive in the new economy. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. Governments want you to believe that they are in control, that they're on top of the economic situation, that you have absolutely nothing to worry about, that nothing can go wrong. Well, GoldMoney.com exists because they want you to have insurance. And I've got Alasdair MacLeod on the line, and he is head of research now at GoldMoney.com. Hey, Alasdair, welcome back to FinancialSurvivalNetwork.com.
It's a great pleasure to be with you, Kerry.
Likewise, we're always glad to have you because you give our somewhat parochial show in Greenwich, Connecticut, an international kind of flavor and outlook. And on that note, what's going on in Europe now and in the UK?
Well, the Eurozone is still drifting towards the rocks without any captain on board, and there is no solution to it. You've got bust countries hoping that they get more of a bailout. You've got the creditor nations like Germany, Austria, Netherlands, Finland, and Luxembourg reluctant to put up any more money. And meanwhile, we're just drifting towards the rocks there. And that's very serious because you're talking about a very, very large economy with a very substantial banking system interlinked with everyone else's banks. And as that problem gets worse and worse and worse, we just get more and more frightened about the consequences. So that's really what's going on in Europe. In the UK, it looks like the UK economy is also drifting downwards. There are worries now being expressed that the government needs to do something, like stimulate or spend some money, spend taxpayers' money. And so the political pressures are mounting in that sense. And I suppose really that's the background to what we're facing over here in Europe at the moment.
Yeah, so it's kind of like we've got this train roaring down the tracks. A huge portion of the world's income and production takes place in the EU, the European Union, more than in the US, and kind of nobody's in control of it. Now, if you're an anarchist, you might think that's a good thing, but when this thing is heading for the end and there's just pretty much a wall of rock there to stop that train, it's not going to be pretty, is it?
No, it's not. And the problem in the Eurozone has got to the point where one suspects that the politicians in Germany in particular, Finland also, rather want out of having to backstop all the Mediterranean nations. I interviewed Markus Kerber, who is a professor of economics in Berlin, about 10 days ago, and he is bringing this court case against the Constitutional Court, the German Constitutional Court, on September the 12th. And he was really very interesting on the whole subject. I don't think we're going to get a clear-cut resolution on September the 12th from the court, because there is also a similar action being brought by an Irish member of parliament in the European Court of Human Justice, the European Court of Justice in Luxembourg. And that is the superior court in constitutional terms to the German Constitutional Court. So it could well be that the German Constitutional Court just puts the judgment on one side until they hear what the result is from the Luxembourg Court. Right. Now, having said that, one thing that's interesting in this, to just give you a scale of how the situation has deteriorated, the last action that was brought before the court was, again, for exactly the same thing, and the estimated cost to the German taxpayer was 170 billion euros. Now, that was a year ago. This time round, Professor Kerber tells me that he is submitting the cost so far to Germany is 2 trillion euros, and there's a further 1.7 trillion in the pipeline. So in 1 year, they have gone from 170 billion euros liability to 3.7 trillion. I mean, that's a frightening deterioration of the situation. And that is what the court is being asked to consider. On top of that, you've got general election in Germany next year. I think it's in the second half of next year. And so the politicians are going to be backing off rather than trying to persuade their electorate that the euro is a wonderful thing and they've got to divvy up some money out of their savings in order to keep the project going. So what we are now seeing, I think, is the backstop strategy, and that is the only way the euro is going to be saved is a short-term kicking the can down the road with the ECB ensuring that countries like Spain and Italy do not need funding, and they will do that by doing anything they can to keep the bond yields down. They will buy whatever bonds or finance the banks in those countries to buy whatever bonds the government needs to sell in order to meet their deficits. So we have got, by default, a money printing mechanism being set in motion there. And this is interesting because this has become very apparent over the last week. And I think at the same time, coming over to your side of the pond, Kerry, the FOMC is now showing signs that they are sort of thinking that maybe QE3 or something, some form of stimulus has got to be brought in order to rescue the US economy. And so the net result of that is, and it may be just coincidence, but we see gold and silver taking off. So I think these are very interesting times, and we'll look back on it, I think, with considerable interest to see how the whole thing interlinks.
Yeah, I agree with you about the part about interesting times, but also scary times, because once you go down that road, and we've been down the road already for years, it seems, but once you start going down that road, there's nothing to stop you from printing. Once you print $1, it's QE to infinity, as Jim Sinclair calls it. And, and then they've held off as long as they could. So they're getting to the point where they're starting to panic, is what it appears to me. And you don't make good decisions when you're panicking, because they're not thought out. They're just, you just try to do something. And I mean, as we're speaking, it's August 23rd today, and gold is up $20. And when I woke up this morning, actually when I went to bed last night, it was up $7. And I said to my friend, and we'd both been predicting a breakout probably in July, so it's a month late. I said, this is the kind of day where gold could go up $100 an ounce, and there's nothing that can stop it. And even silver, which has really gotten killed, it's over $30 an ounce now. So the markets, if you want to read anything into them, are certainly saying that all this talk of QE is great for metals prices, and that's kind of the dirty secret, is that it's just further depreciation of the currency. It's the stealth tax, because you can't get the Germans to vote on it. You can't get the German court to approve of it, but you just go ahead and print the stuff up anyway and let them withdraw if they don't like it. And you really believe that they're going to do that, right?
Well, Professor Kerber thinks that the sensible outcome would be for those, if you like, the harder currency nations, Germany, the Netherlands, Finland and Austria and Luxembourg, to set up a new currency, which he calls the Gulden mark, which is a portmanteau between the guilder and the mark, um, and, and leave the others to sink or swim with the euro. So now that is interesting because as things develop, I think more and more people are going to think that's a likely outcome. And that's going to have, I think, a pretty nasty effect on the euro, which is going to make the management of the situation from the ECB's point of view very, very difficult. Because it's one thing to just print money. If you can print money without undermining the currency, that is a central banker's idea of heaven. If, on the other hand, as soon as you sort of begin to move your finger to the print switch and the currency starts falling, that is the central banker's nightmare. And it could well be that the ECB is going to be faced with a nightmare rather than any idea of ecstatic heaven. Yeah. So, it's it's turning into a very dangerous situation. And it's interesting that our experience at GoldMoney, while gold and silver were sort of backing off their highs of about a year ago, we found that people have been adding to their positions. And basically, we're talking about ordinary folk who have savings, who are worried about the systemic risks, which they see escalating the whole time. And they just want some insurance. And they take the view that you put aside 10%, 15%, and hope it's not needed. So this sort of insurance element has just been building and building and building. And we've certainly seen these flows, if you like, from savers. And it's turning into a very dangerous situation. And we could easily see the euro go into a death slide, which is extremely worrying. And interestingly, there are a number of businesses, high-profile businesses, who have been reducing their exposure to the Eurozone, presumably because they're beginning to think that same way.
Yeah, well, I read about that, and they're getting ready for the euro to collapse, and I guess that's just sound business. Hopefully it won't happen, but if you're a CEO, if you've got wide exposure to all the countries in the EU, and you think there's any possibility that this house of cards is going to come tumbling down, then for sure you want to be prepared and you want a contingency plan in place. And you know what, Alasdair, that contingency plan, maybe not right now, but it's sometime in the near future, is going to contain precious metals. I got to believe it.
Yes, I think that's right. Going back just slightly before we get on to precious metals, all large companies, as you know, have treasury officers, people whose function it is to move a multinational business's cash around and to maximize the returns, make sure the cash is there for the operating subsidiaries, and so on and so forth. What they're doing now is they seem to be removing their cash exposure to the euro to the point where they run it at the minimum. And this is producing some downward pressure on the currency. And to my mind, it's not a very good sign. Usually what you would get is you would get some treasurers who begin to think, well, the euro's fallen enough now under current circumstances. We've got a bit of a profit on the book because we shorted it against the dollar at 130. So we'll buy some back at 122 or whatever. I don't think there is that sort of closing type business going on. It's the sort of business where you assume that there is going to be continuing business despite what your treasury, your day-to-day treasury operations reflect. And I think there are, the major corporations who are really getting worried about their exposure to the Eurozone, and they are reducing their positions. I think it is as simple as that.
Yeah, so we've got a collapsing, imploding monetary system around the world. The U.S. dollar just appears to be stable because everything else is so unstable. And in its exalted position as the reserve currency, it has that reputation for stability, even though it's not really deserved. Based on the shepherding of the currency by the Federal Reserve since 1913, it's certainly not deserved. And yet, it's everything else looks so sick. You're going to put it into the yuan, the renminbi, which is not convertible anyway and which nobody trusts, or are you going to put it into the dollar, which I guess is what we've seen a lot of, that panic, flight for safety. And, you got all these currency units and you can't just go buy gold with all of them. So you have to put them someplace, and the dollar, the best looking horse in the glue factory, as it were.
Yes, I don't think we're sort of quite at that point even yet, Kerry. I think if I can go back to the example of company treasurers, they probably account in dollars. So their idea of safety is basically get rid of euros and just bring it back into dollars. And that is as far as they think. That is how they're taxed, that is how they account, and so on and so forth. So the natural, if you like, reaction to a paper currency getting into what could be terminal difficulties is to just shift it into another paper currency. And I don't think you're going to see companies doing very much on the gold and silver front as an alternative to paper currencies. They just don't think like that. On the other hand, what is interesting is what the banks are doing, because the Basel III changes that are coming through, and it's even got as far as America, where it's out for consultation, is to include gold as a tier 1 asset when it comes to calculating haircuts and so on and so forth. In ranking exactly the same as cash, by the way, and short-term government debt. So the banks now have an alternative, or at least they will have an alternative from next year, of holding fiat currencies and being entirely committed, if you like, to the systemic risks that go with that. They will have the alternative of having gold without being penalized. Now that, I think, is a very interesting development, a very important one. One that has been reported by some people. I've written on it and so on and so forth. But generally it is a development which people, I don't think, really understand the implications of so far. That could be a very, very important thing.
So we're on the cusp, if you will, of a lot of potentially, I don't want to say cataclysmic, but certainly a lot of decisions that are going to have to be made very quickly by politicians of limited intellectual capacity and limited freedom because they serve their elitist masters. And they're going to have to make these decisions really quickly if they haven't already been made for them already. And what are the odds that they're going to get all this right, and that this edifice that has been cobbled together with chewing gum and paper clips and bits of paper, what are the odds it's going to remain standing after that final black swan descends?
Well, I think it's long odds against. It has to be. I think I have a little more respect for the politician's intellect than you have, Kerry. The reality of the situation is that any politician today has inherited a situation which he has to operate, the boundaries of which he has to operate within. And all his economic advice, you get people with PhDs out of the top universities. They're all Keynesian. And he has to listen to them. And furthermore, he is elected by electorates, by pressure groups who basically want him to spend someone else's money. That is the reality of every democracy we have now. And the politician is actually hemmed in this. There's not a lot he can do. There is, I think, I was hoping there might be one possibility of getting out of this problem. And that is that if the euro collapses, as I think looks increasingly likely, the central bankers will, for covering the dollar, covering sterling, and the yen, and so on and so forth, might take this as a wake-up call and think, no, hold on a minute. We're destroying our currencies. There is a significant problem that we're going to wipe out our paper currencies if we continue as we are. We therefore have no alternative but to stop printing money and let the over-indebted businesses and governments fall as a result, because the alternative is far, far worse. There is an outside possibility, therefore, that the collapse of the euro might actually persuade the governors of the other central banks that there is the huge risk that they will destroy their currencies by pursuing current policies. Whether they will prevail or not, I think, is still very much odds against. But I think that is our only hope. Just imagine in America, if, let us say, the whole of government spending has to come to a shuddering halt because the Fed refuses to buy any more government debt. It's a very, very big ask of one's imagination, even if you're an Austrian economist, to really see that coming about. And that, I think, is the big difficulty about looking into the future. And that's the big difficulty, trying to sort of see some way in which the politicians could possibly avoid an almost terminal monetary crisis.
I don't know, Alasdair, you're beginning to sound like an optimist to me. I'm kind of take Dr. Johnson's view of politicians and their ability to cope, going back to Dr. Johnson's view on second marriages, the triumph of hope over experience.
Over experience, yes, indeed.
You can't emphasize that one enough, because this is what we're up against, competing interests, and the alternative when you crash out this economy because you refuse to stop printing, refuse to continue printing, rather, I don't know any politicians that really has the guts to take that on, but I guess we're going to find out, aren't we?
I think it's going to be a test, yes. I agree with you. I can't think of any of the politicians around today who would have the guts to take it on. And I can think maybe that the central bankers will get very worried about the situation and think that there is only one way in which the currency can be saved. I think some of them will come to that conclusion. And remember that they do all meet regularly at the Bank of International Settlements by telephone, if not actually in any other way. So they do swap notes, as it were. But whether they can be truly independent of their governments in the sense that they will deny their governments money, now that is a very, very interesting one. It really is.
Yeah, well, we're going to find out whether we want to or not as our nightmare continues unfolding. So, Alasdair, obviously, we can find you at goldmoney.com. You also have a blog, financeandeconomics.org. I don't know how much you've been doing there because it sounds like you're amazingly busy over at GoldMoney. But, hey, a lot of good things there. And everybody needs to be aware because the warning signs here are unmistakable. When you start seeing gold just go up and pretty much nothing stopping it, no resistance, and then you see silver, it's up 91 cents at the ounce today, you know that something's going on here.
Yes, exactly. But it's just very unfortunate as far as the authorities are concerned, if I can use that sort of blanket term, that the technical situation in the gold and silver market has become really quite unstable. I mean, I've been looking at this for some time, and silver and gold actually have been behaving differently insofar as the open interest in gold has been declining for the last 2 years from around about 650,000 contracts down to recently under 400,000, though on this rise it looks as if it's ticking up a little bit. And if you look at the commercials, as it were, who are basically the swap dealers and the producers and merchants and processors, the swap boys have basically maintained an even book for about the last 6 or 8 months, whereas the people who have been short the producers, merchants, and so on, they have reduced their short position somewhat. But it's not going to take very much demand from money managers and so on and so forth, whose net holdings are at historical lows, by the way. It's not going to take much of a build-up in demand from that side, a few people following Paulson and Soros maybe, to really test the producers and merchants, that net figure. And there, I think I'm right in saying that at the moment, the producers bit, they are short of around about 200,000 contracts, which is a heck of a lot of gold. It's 640 odd tons, which, if you look at the free world's production, is roughly about a third of it. They can't actually go much more short than that. So the whole situation in gold is looking pretty dynamic and explosive, and silver even more so. I mean, what's been happening there is that the open interest has been building for about the last 10 months, and it's just been sort of gradually ticking up. And it's really a situation of no stock. There's just been no stock available there at all. And these shortages in the market, I think, are creating what looks like a bear squeeze. And this, I think, helps explain why silver has moved up from what sort of recent lows of around about 27 and a bit.
Yeah.
And as we talk, we're sort of almost knocking on the door of 31.
Yeah.
So it's a very dynamic, very explosive situation potentially, and so for the manipulators, it's actually going to be quite difficult to control.
Oh yes, it will. It shot through $30 like Charlie Sheen checking out of rehab. It just blew through it like it wasn't even there, and that's so interesting about resistance points, because once the market changes direction, resistance become the floor and become support.
And exactly, and they're just sort of sort of historical oddities, but of no relevance actually to what's going on.
Exactly.
I agree with you.
Exactly.
I mean the days of containment, as it were, in these markets, I think, look over.
Yep, and we'll get into manipulation at another point, but honestly, I think the whole meme of gold suppression, precious metal suppression it's just going to become irrelevant, because once it gets to that to its nominal high of 1920 and it breaks that and gold breaks the $50 mark, we're not going to be having these discussions anymore. It'll kind of be like, we'll reminisce about it and say, remember way back when the Federal Reserve tried to keep the price of gold and silver down to make fiat currencies look like they actually had value? It'll be like you'll tell your grandchildren this story and they won't believe it, because it's just going to be meaningless. But right now it dominates the attention, but we all know this day is coming. And Alasdair, on that note, we've done a bunch of interviews. They're all up on financialsurvivalnetwork.com. Go there. We got James Turk interviews there, Mark Faber. I just interviewed Gerald Celente yesterday, so we're optimists compared to Gerald, I'll tell you that. And
yes, I know. I interviewed him in New York, but must be nearly a year ago now. And I mean, even then, he was absolutely adamant about the way society was breaking down, and we've certainly seen that. He's been dead right, particularly with respect to the Arab Spring and all the rest of it.
Yeah, and that is disturbing. The decline of Western culture. Forget about everything else, but just our culture. The way it's become this parasitic, just this unhealthy, but hey, I don't want to get into it. I don't want to bum out the listeners. We'll talk about that another time too. Alasdair, hey, thanks for being on, and thanks for giving us some insight, because the news is going to break from Europe and head across the Atlantic. I'm convinced of that. Whatever is going to happen, it's happening with you guys first. So on that note, Alasdair, hey, we'll talk to you in a couple of weeks. You be well, and thanks again.
Well, thank you, Kerry. It's nice talking to you again, and we'll keep in touch on it.